Well, good afternoon, everyone. I'm Mitch Lovett, Interim Dean of the Simon Business School, and it's my pleasure to introduce our distinguished guest for this afternoon's Simon Insights from the Top webinar, Evans Lam. Evans is a dedicated private wealth advisor with decades of experience in investment banking, money management, global advisory services, empowering clientele at the First Boston, Toronto Dominion Bank, Deutsche Bank, Citigroup, and UBS to fulfill their unique missions. He's been a voting trustee of University of Rochester for 14 years, serving at the academic affairs and advancement committees, and he's a member of the Simon Business School's National Council and chairs the George Eastman Circle. He's also one of the university's most notable philanthropists. He was instrumental in revitalization of the University of Rochester libraries, establishing the Institute of Performing Arts, Medicine, and creating dedicated space at Simon's undergraduate business students area, the Lam Biz Hub. He's endowed professorships at Simon and the Eastman School of Music, as well as supporting numerous scholarships across campus. So another way he's giving back is this talk today. I'm truly excited about today's conversation. Let's jump right in.
Thank you, Mitch,
Evans,
for your kind introduction.
well, thank you for joining us today. It's a true pleasure to have the opportunity to learn from your experiences and insights. And I want to thank everyone in the audience too for joining us and being a part of this conversation. To make the most of the conversation today, we're going to try and cover as much as possible of Evan's career, and I'd like to walk through kind of your journey in chronological order, focusing on what you accomplished, while also exploring kind of the relevant whys and how tos along the way. And then after a little bit, we'll open up the floor for audience questions with the time remaining. So to use that time well, let's dive right in. So
Well,
thinking back a little ways, Evans, now it's probably a few years back to your time,
30
just a
years.
couple, to your time here at the University of Rochester and at Simon. Can you share some context regarding what you were studying, why you ultimately ended up here and, pursuing finance?
Well, I'm not joking. About 15 minutes ago, want to double check my talk. So I just Google and check out what's the 10 most influential finance theory for the capital market. And then I discovered that I learned all 10 of them during my day's assignment. So it is
That's a good
truly,
count.
yes, truly so amazing. Of course, all these, modern portfolio theory, the cap, even the later day, the arbitrage pricing theory, the random walk, I mean, the Black-Scholes options and everything. So it was so interesting. But talk about, my experience. I come from a humble background but at the same time, I kind of born for economics and finance. When I was 6, 7 years old, I asked my dad, at that time, I said, Dad, what is inflation? So is inflation good or bad? Just again, 6 years old, okay? And my dad say, get out of here. But I only have a few years education. So and then the interesting thing is also my dad, but give me a suggestion that inspired me to be a banker. He said, well, son, I have to work 362 days in a year and 12 hours a day to make a living. If you look at those bankers, 5 days a week, only work 4 hours a day. So you should be a banker. It is very prestigious, good pay, no work, just signing paper. So that's why I'm inspired to be a banker or financier at that time. So it's not joking. It's true inspirations. That's why when I enter Rochester, I have determined that I would join the 3-2 program at that time, 3 years for undergrad and 2 years for MBA. I was determined at that time so that, I can finish my training, economics, finance, and accounting. But most importantly is that the professor in Rochester, it really inspired me. I couldn't thank my first economic professor and also my math professor because when I studied economics in high school, I found it so easy. So it's a piece of cake. Then I studied economics in Rochester, and it is so challenging because you really have to understand a lot of the concepts in order to answer the questions presented at the exam or during the classroom. And then I also found to my math because at that time I'm kind of good at math, but I never loved math. I used to look at math as a tool, but then my first calculus professor showed me the wonderful world of mathematics. So since then, I've taken a lot of math class, statistics class. So some of my classmates think that I'm a statistics major, but that's why it is kind of unnatural. I want to be a banker because it's an easy job and I get paid well. I don't know about getting paid well or not these days, but I'm still working 14 hours a day, 7-11, 7 days a week. So,
Let's say, how did that four hours a week job work out?
okay. So,
Well, look, Evans, you've built an impressive career across firms like UBS, Deutsche Bank, Citi Smith Barney. What were the defining moments that shaped your path in wealth
mm,
management?
okay. I think there's two defining moments in my career. First is that after Simon, I was very fortunate that I was able to intern at First Boston, and they gave me a returning offer. So I joined First Boston and kind of Wall Street at age 21. And by the time I was age 22, uh, I was I graduated kind of the very top at the training program. And so I picked the high tech finance as my first career spot. So I
Mm.
was given in 1985, I was given the opportunity to evaluate whether to invest, finance a $20 million for a kind of startup called Sun Microsystem, the Java of the world and everything, mini computers. And then, of course, now it's part of Oracle.
Mhm.
So now that is the defining moment. That's why I always advise Simon's graduates. The best part about Simon education is you learn the latest techniques and tools and you apply it. Okay. So what did I do? At that time, it's even, you know, before Excel, there's Lotus 1, 2, 3. So there was the Black-Scholes option pricing model. Okay. Nobody is able to kind of program it. So I did my best. Okay. So the one I did is that we want to get equity, get warrants from the company before their IPO. So how much? Get 1%, 5%, 10%. So we have to establish, a framework, how much to get. So I built the forecasting model which was all wrong. But looking back, but doesn't matter. Nobody know that I was wrong at that time because I am the only one that can do it. I built it using the discounted cash flow and everything what I learned at Simon, and also incorporated the Black-Scholes option pricing model. So long and behold, that $20 million investment give First Boston 20 times returns in 3 years. Now that's the first defining moment. And the model was so good that Scott McNally, the CEO of Microsystem, applied my model as the official forecasting model for 5 years, which is very unusual for any high-tech companies. So that is kind of the defining moment. So we all need that kind of defining moment. So brush up your technique, learn the latest, learn the AI, all the technology that is offered by Simon and Rochester. So, but then the second moment that shaped my path is that I become an entrepreneur. So 1985, get good bonus, everything. And then in 2000 and 1991, I get a great bonus because at that time I was working with Banker Trust, which was later by Deutsche Bank. For those who don't know Banker Trust, at that time there's only one firm that can rival Goldman Sachs. It's Banker Trust. And we are the designated banker for KKR because KKR's the principals, they are in San Francisco. So I work out of the Los Angeles office. So long and behold, 1991, for those who remember, we work on the KKR, RGL, the Bisco deal, the largest deal at that time, $20 billion. I specialize in leverage finance. Then Then the United Airlines deal, the leverage buyout deal, kind of did not go through. It was a disaster, and then people are expecting a recession. So that was February. I still remember on a Friday, I get a great bonus. I talked to my boss in a cocktail and everything and said, well, I heard about the rumor of laying off and everything. My boss said, are you happy with your bonus? I said, yeah, I'm very happy with my bonus. So come back to work. Do not forget about those rumors. And guess what? Monday, after my breakfast meeting with clients, I came back to the office at 9:30 or 10 o'clock. The whole floor was down. Everyone was laid off. Everyone. Everyone.
Wow.
Because we no longer fit into the strategic interests of bank trust, corporate America. So that's why I took about 2 months to think through what is my career. They pay me for another 6 months, so it's good. So I have time to think through. I said, I want to be an entrepreneur. I cannot be a corporate man. So what is the best way to be entrepreneur is that I go into wealth management. I still remember at that time I joined the Shearson Lehman Brothers. Later become Solomon Brothers, later become a lot of things. And then later become Citigroup and C. Smith Barney. And I spent 17 years there. Now, I was a top deal maker at Bank of Trust, having my window office and the top floor of the downtown building, 300 South Grand, then making a good six figures income 30 years ago, okay, and down to conscientious decision. I could join another bank, but I don't want to. I want to be an entrepreneur. So I joined Shearson Lehman Brothers to be a trainee again, so that I'm going to build my book of clients. I want to have my own business. So they pay me $2,000 a month for 3 months. Then you're on your own. So that's why I'm very proud to say I have 100 clients. I manage billions. Each and every client is not UBS clients. It's Evans Lam's clients. If I move to Morgan Stanley, if I move to Goldman Sachs, if I move to Rockefeller, they will follow me because they are my clients. So think about UBS
Mhm.
or Citi, it's just a franchise providing all the necessary support. Okay. But I am an entrepreneur. So that is the story. Giving back to students is that be prepared that failures always happen, but you got to you know, the next step and then think through that. Don't get stuck with, your past glory. But one thing about, this business, in the old days, again, they give you a phone book and then you make the cold call and you call the private clients, everything, you set it up, you be a stockbroker and become an asset manager later down the road. I didn't do that. I have not made one single cold call. You know why? Because I also took a lot of my contacts. I built a lot of great network during my banker's trust day investment banking days, so that I call on the accountants, I call on the lawyers, I call on the valuation consultants. So my first group of private clients are all bankers, lawyers, CPAs, professionals. And then I was able to get a few major banks pension account, 401k accounts. So that's how I transition. So that's a very interesting transition. But the key is that I do not want to be a corporate man again because my clients, as much as I'm doing so well, those KKR is not my client. KKR is bankers trust client. They are not Evans Lam client. I want everyone to be my client so that I am, at least I have a false sense of security, job security, which thank God it does give me
Yeah.
job security.
Well, you mentioned the Black-Scholes option pricing model. I'm
Yes.
I'm curious, kind of go to the theoretical concepts that
Hmm.
proved most useful, especially in your earlier career
Hmm.
what you felt was
Hmm.
most useful and kind of felt
Hmm.
less applicable.
Okay.
Where would you consider some of the most
Well,
important
I
ones
am
there?
biased because the Black-Scholes option pricing model make me make my career. So I think it's the most important. But seriously, I think the Black-Scholes option pricing model is not just about option. It's about, if you put it together with the game theory, it really
Mhm.
work very good hand in hand, to look at volatility, look at different factors, and also, compare it with the latest, which I like, the arbitrage pricing theory model, by Stephen
Mhm.
Ross, 1976. And basically the challenge, of course, on that model is that what factor to use. So that's why you have to have a lot of experience, you know, a lot of guts, a lot of experience, a lot of guts, and a lot of basic knowledge, okay, about what's going on in the world, in
Mhm.
civilization, in politics, okay, in psychology, in sociology, okay. So you have to cut all this. It's like, then, because those are the factors you have to put into the modeling. Okay, so that's
Mhm.
why Black-Scholes, of course, is number one. But seriously, there's a few model I'm still practicing today, of course, as a portfolio manager. The modern portfolio theory, 1952, by Marcus, and then of course, Bill Sharp, the capital asset pricing model. Of course, the alpha beta. Most important is the Sharp ratio. So, and then I'm sure if every Simon student know, if somebody give you, five managers give you a 20% return a year for the last 5 years, which one is a better manager? You look at the Sharp ratio. You look at the risk adjusted return. So that is very important. And then, of course, the Eugene Farmer's 1960s, the efficient market hypothesis. So all these are very important and theory, but of course, later on, I basically put the efficiency market hypothesis more into the arbitrage pricing theory. Now, talk about economics model or theory. That, because I'm an economics training, I find it less useful on the microeconomics, which I will explain, because throughout the last 30, 40 years in my career, I find that humans are not that rational, you know. And so I believe in Taylor's, our own, Nobel Prize laureate, PhD from Rochester,
Mhm. Yeah. Dick Taylor.
the yeah, yeah,
Mhm. Mhm.
exactly. We are irrational, but in a very inconsistent ways. So, but I think, the game theory, which I learned at that time, was more a qualitative model when I was in Simon, and in Simon in economics, because of Riker. So game theory, very important. And then
Mhm.
in economics, I think most people do not understand, when it comes to management decision, is to fail to understand the competitive versus the comparative advantage. You can just ask our Mr. President. I don't think he commands this concept very well. Okay, so this is
Mhm.
this is not just a concept, and how you really understand, the dynamic between competitive and comparative advantage. So those
Mhm.
are those are
Mhm.
the important theories that kind of guided me through, my career.
Oh, no, that's helpful, and it kind of leans into the next question I wanted to ask, which is you've got these quantitative models, and then there's kind of judgment and intuition
Mm.
when you're making investment decisions. And how do you balance between the two?
Okay, let me just share with you one story first. Okay,
Okay.
it's a story about my sister-in-law, a smart lady, Michigan MBA, CPA, controller for two public listed companies in the US before she returned to Hong Kong and worked as an M&A analyst for Lee Ka-sing, the wealthiest person in Asia. So Lee Ka-sing basically owned all the ports and everything. And then she joined the team. There's about 20 analysts. that look at every deal that Mr. Lee is looking at. And after a year and a half, I went back to Hong Kong, and she said to me, he said, brother, I want to quit. I said, why? You have the best job, okay? The best job, you get paid well. He said, I can't handle the job because I'm looking at so many deals. I'm looking at so many deals. It's mission impossible. I said, Clara, that's your problem. Your biggest strength is your biggest weakness. And that's also go with Simon graduates because our strength is quant. So we automatically jump into the number, jump into modeling, jump into a lot of things without asking the following questions. I always joke about, if my boss assign me something to do, number one, I'm thinking about, do I have to do it? I try to avoid it because you laugh. And then number two, if I
Mm-hmm.
have to do it, can I delegate it to my teammates? If I cannot delegate to my teammates, can I delay it as much as possible? Can you laugh? But thankful the rationale is that you really have to look at the dynamics of the questions or the problems
Mm-hmm.
that is in front of you. Okay? Because you have limited time, you have limited resources. So if you cannot, there may be other more important projects for you, then don't do it. If you have to do it, if your associate can do it, delegate it so that you can focus on just on the higher value added decisions. And then if I have to do it, why I want to delay it as much as possible? Because I want to make sure that why is becoming my priority. That got to be the reason. This is my priority. So going back, so how should I provide the solution to Kara? I said, okay, that's your problem. You look at numbers. Okay. That's why you look at every deal as the same deal. No. For example, if he is buying a lot of by the largest Spanish telecom company, then you should take a look at a lot of telecom companies in the Latin America country as your top priority. And at the same time, I hate to sell Simon students is that what we learn here is to build a common language. It's like you can speak English. It's like in accounting, you can speak the business language. So analytics is no different than commanding the English language. You need it,
Mm-hmm.
but doesn't mean that being a good quant person will make you a superstar. Okay? But just remember that. So why? So it is like going back to this case, I said, well, think about that. Mr. Lee is a very smart person. He see everything in a very global perspective. When he buy ports, he will not buy one port. He buy the Hong Kong ports, he buy the Shanghai ports, and he buy the Panama ports. Okay, all the container ports. That's got to be a sequel. Okay, to fulfill the grand plan. So if you have 20 deals in front of you, you have one telecom deals that is, let's say, Brazilian, that's Mexican telecom, mobile telecom, and then the other one is a container port in Netherlands. Look at these two right away, okay? And then the other, you just get by. Then also, don't look at it as much as you know that there's no way you can quantify a lot of things. And so I look at my Sun Microsystem model. I look at it, I laugh because the numbers, not even one number is correct. Now, but the foundation, the theory, the conceptual framework is correct. So I can stand tall. I can stood tall in front of all these investment bankers and tell them that this is the approach. This is the best we can do within the resources, within the knowledge that we are given. So it is a common language. So we got to learn the common language. But end of the day, it's still your judgment, your intuition. So where do they come from? First of all, you have to know You have to in tune with what's going on in the world. Seriously, you know, even, anywhere that happen, I always say that, anything, why I have to do at least every day 2 hours of research, and then at least over the weekend, 8 hours of learning new stuff over Sunday, because I need to have all the basic knowledge. Okay, your basic knowledge, very basic. But just what? Why if basic? Sometimes when you look at a lot of Nobel Prize theories, they come to very basic. They use a lot of quant models, a lot of let's just using, our own Simon. Okay, the theories that I use the most is positive theories of accounting. Okay, this is our hallmark. Positive theories of accounting. Essentially, what it means, I can put it in 2 lines. You don't have to do any research. Is that if I change the accounting system, okay, then it will change the incentive of corporate, and it will change the behavior of the consumer public. It will change a lot of economic behavior, right? Just changing the accounting system. Do you need a PhD? Well, of course, I'm not diminishing that, but you just have to learn the essence without really understanding. Okay, another famous. I just talk about our own Simon. I use it a lot. Agency cost theory. Now think through that.
Mhm.
Why we have the leverage buyout business in the 1980s and completely, under the Reagan, completely turned around the U.S. economy because of the agency cost theory. So again, if you look at the basic, what is the basic? The basic, simple as that. That as an owner, you pay more attention to your business and you have a higher productivity, you will have better outcome. In very simple language, right? I'm not trying to, but again, so when you go to top investment bank, doing M&A, doing anything, you just remember you learn the language to communicate and to learn the language to have the confidence to earn the right to speak your opinion. That's all it is. At the end of the day, in any financial decisions, only time will tell. Only time will tell. But if you are right, if people believe you, then you have the upper hand and you can advance the firm's interest, you can advance your own career. So I'm not trying to be sarcastic, okay? But it is the real world. The real world is that you just to be a little bit better. That's why going back to the comparative advantage, you just have to be a little bit better than your peers. A little bit something unique to offer, different
Mhm.
stage. So when you came out from Simon, you got to have that skills. You know the pricing, the AI, how to use AI very quickly, and how to apply the analytics, the Python, how to gather data, what data is relevant, non-relevant. All these are very important. Don't minimize it. But when you advance in your career, those become internalized. The more important things, when you're getting more and more higher level, all the basic knowledge become more important instead of your technical knowledge.
I want to take a little bit of a direction off of this point, which is you're talking kind of the relationship between kind of the theory and practice, especially as you're growing in your career. Do you see that the rise of data analytics, the technology AI, that this has changed that relationship, and should people be thinking about it differently than today?
Yes, I
Mhm.
think that over the last 3 years, 3.5 years, because of the open AI, the chat GPT and then the AI world now. I talk to a lot of students because you know that I have a foundation, 15 scholarship students going to Yale, Chicago, Harvard, all the world, and then I have at least 10 scholarship students. So I talk to my students all the time. I learn from them. I learn from them, and so that's why I get very in tune what's going on. So talk about in the old days, when I was a trainee at First Boston, I was trained in foreign exchange. Okay. Now, at that time, I just, of course, I'm not good in speculation, so I'm a very poor trader. But I learned at least the basics and everything. And the trader have a lot of instinct, okay, a lot of instincts. But the manager of the foreign exchange basically is very good, very analytics. Why? Because he needs to balance the position so that the risk is not completely out of control. For argument's sake, eh, all trading all traders are betting on the appreciation of yen. So he will short the yen, okay, to balance that portfolio. Now, as humans, now my students are doing basis trading now. Basis trading. They get into hundreds, 200 million of high yield bond or some kind of private credit, whatever these days you heard about. And then they trade on 1, 2 bips. And they can make a million or half a million out of the 200 million and they leave. And it will be split seconds. It can
Mm,
never be done in the good old days or bad old days. You can only do it now. Now, also, as a manager, think about the tools that you need. In the old days, okay, you as a manager also have a lot of intuition as well. Now, you can quantify it now because before they have the model to do all this basis trading on those bonds, you already set up the risk control system. And probably you will, advance enough, like UBS or the JP Morgan of the world, we have 1,000 analysts in AI, right? And they are helping you to kind of perfect a lot of the risk control already. So then the job of the manager has changed.
mhm,
Instead of being a super great, super risk manager, now the AI is doing a better job than than being as a risk control manager, right? So the
mhm.
key now for basis trading, how do you get money? Is you talk to the right people. You have the network, you have the connections, you know who to talk to. You kind of smell that, right now Goldman Sachs have a certain, 200 million that want to unload, and you happen to know the Goldman Sachs people, you hang around with them, and you say, well, we are willing to buy it. Okay. And what's the price? And then you say, well, this is it. You don't like it, and I want to wait 5 more minutes and everything. So it all comes back to your unique strength.
Mm,
It's not the analytics. It's not the AI. It's your people skill. Nobody think
mhm,
about that.
mhm.
It's your people skill. How do you assess to those special deals? Again, before you can even put your finger on the analytics or computer do the analytics, can you source the deal first? So
Uh,
technology definitely changed, you know, everything. For the last year, 2 years, has been most challenging time of my career. Not because we have a pretty unpredictable administration in terms of economic policy, trade policy, and everything, and that affect the ups and downs of the market. But I have to spend so much time learning, educating myself, keeping in tune what's going on with AI, what's going on in the world. I find it very exhausting for the last 2 years just to keep up with my knowledge. That's change. That's very
mhm.
challenging for the last 2 years for me.
Wow. Well, first the conversation thus far is really making me think about both our AI initiative, but our kind of match to that, our integrated learning and integrated leadership initiative that's focused on exactly the kind of social skills, influence, and collaboration skills you're
Hmm.
talking about at Simon.
Hmm.
So it seems like we're doing something right in that area. I'm,
Mm-hmm.
I'm, I'm, I want to kind of shift a little bit to think about the research side because you're talking about having to reinvest in yourself.
Mm-hmm.
And research is always a place that we think about sort of being on the frontier of being able to
Mm-hmm.
create that knowledge. So
Mm-hmm.
I'm wondering, do you see a gap between academic research and industry application? And if you do, do you see how it can be bridged?
Yes, definitely. Especially so in Simon. Because I do talk to a lot of Simon students. I think again, let me just use another example to show you that. One students come to me and basically want to do a study why Vimo have so much customer dissatisfaction. What's going on with Vimo, and they have all the data, and why all of a sudden they cannot expand into different cities and everything. And then versus why how Tesla can improve their self-driving, somewhat to that extent. So I told him this. I said, okay, now again, be careful what you ask for. Sometimes don't waste your time. Now, I'm not talking down on Vimo because whatever you get from Vimo, the data is irrelevant. Why is irrelevant? Why the tested data is relevant? Because the Vimo, as you know, in major city, if you sit on it, there is a satellite receiver. It's not just for the showy, the turning. There's no sensor. They usually use the Jaguar Pacer, which is a little bit mini four wheel, and then using the satellite. It's the satellite link and the software that has problem. So you can look at all kinds of data on Vimo on customer satisfaction and why it have a certain stop in San Francisco between Grand Street and whatever. It's useless. I much rather, if I'm McKinsey of the world, I much rather spend time, money, and study the effectiveness and how to improve the software. Should we supplement a lot of the a sensor adding to those cars to with the satellite? Again, I don't know, but just looking to do the
Mhm.
Vimo on customer centric, you're wasting your time. So why I putting into this perspective is that a lot of times, in academics world, you know, any questions look like a um, interesting question, especially if they're original thinking. So we pride ourselves in a lot of original thinking. But the industry application, I mean, I'm not saying it, as an oxymoron. The industry application is always about common sense. It's about common sense. So please, you're not doing PhD, assignment. You're doing MBA, MS. So as much as you need to know all
Mhm.
this theory, again, those academic research, those theory is your language. So it's like you're great, you command the language literature. So you can speak elegantly, better than the others. So that's the research that will help you to be superior in terms of presenting yourself. But the application is still a lot of common sense. That's why I go back you know, to the observation is that our Simon grad does not have a really good perspective, on the real world. So I think if I have my suggestions, I think having some more clinical professor with industry experience having more kind of webinars like this with people who
Mhm.
are in different fields to share with the students. I think that is very important so that they know what the real world is like. And but the academic research is very important. I still, as I mentioned, I still benefit from all the theories that I learned. All the
Mhm.
major
Mhm.
10 most important influential financial theories that I'm using at least 8 or 9 of them every day. I learned it 40 years ago assignment. It's amazing. It's truly amazing. How
Yeah.
advanced
Those
Simon's
enduring
education is.
frameworks.
Yeah.
Yeah, the by being so advanced, it creates the enduring frameworks that people use. Evans, just before I came to the webinar, I was actually sitting in on our Simon Vision Consulting Club
Hmm.
presentations where they're working with real organizations needing
Hmm.
help doing consulting with them, and they were presenting their kind of results out of the recommendations. So this seems right in line with the kind of things that we need students to be doing and trying to apply their common sense with the language of the
Hmm.
analytical frameworks. That
Hmm.
I appreciate the perspective on that. I want
Hmm.
I want to shift gears just a little bit. We only have a few more minutes before we're going to have to start shifting to the audience questions, but and sort of probably heading in that direction. I want to ask you, drawing from your experience, what advice would you give individuals who are just starting their careers in finance, who are considering a path in financial services today? Kind of what
Hmm.
what what would their advice be to them?
Hmm. Okay. First of all, I think be a great listener. Okay.
Mm,
Before you learn how to speak, please listen. Because a lot of, at the end of the day, why we are better in whatever we do, finance and everything, because at the end of the day, it's still people's business. So by listening is very important. And again, so, and then there's no bad starting job because every job will prepare you for your next phase. Of course, you have to move on because it's like, 3.5 years ago, there's no AI. When I was at Simon, there's no Google, right? So you kind of keep on moving, but the Simon education provide you the base. So grab whatever intern opportunity, even though it's not with UBS. So what? Okay, any opportunity you can grab, let you
mm,
see the real world. Let you see how people work. Let you have a chance to talk to the smart people, to ask the questions and be a good listener. So it's like our former trustee, Bernie Ferrari, who's a senior consultant, McKinsey, power listening. So that's very important. Uh, and also, don't get gung ho into certain specific job. For example, people will say, well, in my days, of course, the best job is investment banking. And then after my days, is consulting, McKinsey of the world. And then after that is VC. And still after that is private equity. And then now a lot of graduates, they think that the best career is wealth management. But when you think about it, I've done kind of almost everything. Okay, and I keep learning. So the most important thing is that start with anywhere. It doesn't matter. Okay, be humble, be a good
mhm.
listener, and then observe, and then please, if you have not studied any basic psychology, take a few psychology classes. That's probably more important than anything else because you can observe. You can learn by observing a lot of things. And so again, no experience is bad experience. Every experience counts as long as you know how to capitalize on it and build on it.
Well, Evans, this has been fantastic to get to talk with you, learn from your experiences, and I appreciate your sharing your story and insights. I want to kind of shift us now to those questions from the audience. You've already shared a tremendous amount of wisdom, and I'm sure these questions are going to give us kind of a new lens too. So, if you haven't already done so, if you want to submit a question, the audience members, if you want to submit a question, the Q&A function will allow you to do that, and then we'll ask some questions from those. So the first question I have here from the audience is, if you were just starting in private wealth management today, what would be
Mm,
your strategy to build a book of clients?
mm. Okay. Now, again, I hate to be, unless, you know, you are really from the Rockefeller family or the kids of Elon Musk, it is impossible to start a private wealth management career because the clients know better than you do. In our business, again, we talk about basic knowledge. You got to have very good kind of quantitative analytics. But people basically, our clients look at you, look at me as their family CFO. And so the biggest privilege that I can brag about in my business is not, oh, how much assets I manage, and how many, what kind of returns I did this year or last year. No. The key is I have earned the right to sit with my clients' family members at the Thanksgiving dinner, Chinese New Year dinner, New Year Eve dinner. All this, you earn the right. That means that the whole family has to trust you. And there's a lot of issues. Actually, the technical issue are the simplest things to resolve. It's always the people's issue. For example, you know, my biggest failure is that I worked with a major family for 2 years on the estate planning. I finally get it done because I have to negotiate with all kinds of interests because of divorce, prior marriage case, and everything. At the end of the day, I've done at least 100, master kind of estate plan. And this one, I call myself a failure. Because why? Because at the end of the day, because I compromise everyone, I try to make everyone happy, it did not achieve my ultimate objective for the clients and how to optimize their financial interests. So I call it a failure, but the client called me a success because I was able to balance everyone's interests. So that is the challenging thing is that you have to not only know about investment, you have to look about psychology, you have to look about history, you have to link to the client's hobby because then they can trust you because they have to like you. So if, for example, if my clients, that's why I'm very good in clothing design, I'm very good in jewelry design, I'm very good in car. Whenever my clients bid on a vintage Ferrari, whatever, they always go with me, always ask me to go. Whenever they go into any paintings collection, they always ask me to go. Whenever, my clients spend $10,000 on a jacket, or the lady sent $8,000 on a Chanel dress, I would say, wow, it just came out from the shop, T-way, from the show 3 days ago in New York. So you say, well, there's nothing to do with finance. Yeah, nothing to do. Because as far as the client is concerned, you are making money, you are producing a consistent returns with good risk management. It's a given. It's a given. You just have the
Hmm.
passing grade. The way you can keep the clients and family happy is that they trust you with everything. They trust you with, well, which medical school should I go to? And my kids should go to. They trust me with the fact that now my son have free career with VC and everything. Which one you will pick and why? And can you talk to my son about this and help him sort through a lot of issues? So in private wealth management, you need a lot of personal experience.
Hmm.
So if you're in for the top, the first way is that you join a good team. Okay, you join a team and you learn the basics. But more importantly, you got to be a people person. That's so much different because in investment banking, in trader and everything, you don't need to be a people person. A lot of business, as much as we call it teamwork, you don't need to be a people person. This business is all about people.
Hmm. Oh, that's great. That's great. I want to go to the next audience question. This is kind of taking a much bigger view on things. What do you think is the biggest challenge for the banking industry in the next 5 years?
Wow, this is a huge question. Okay.
Yeah.
I think that the biggest challenge um, for the banking industry is that the it's not just banking. It get into a problem is that uh, for example, now nobody want to hire a junior analyst for investment banking. You
Mhm.
know, and why? And nobody want to hire, a junior analyst to crunch numbers because that can be crunch. So at the same time, again, how can you jump from a junior person to a team leader and then to be in senior management? So there's a process. So what's the problem with the AI is that it replace a lot of the training jobs. Okay, I still remember when I was at the First Boston, they told me, I said, with your pay and your training costs, we spent $500,000 on you for the first 2 years. And at that time, 500,000 was a lot of money. And now I understand why. So now
Mhm.
no firm, no banks will want to invest, in that kind of in talents, okay,
Mhm.
in a very selective, very small scale. So that's why it is like it's a very good question. So it's like this is a chicken and egg situations that if we do not train enough junior person, how can we get them into a senior positions? Okay.
Mhm.
And that's not just at UBS. That is go with every firm. This is really the biggest challenge that the AI is doing right now. Okay. But at the same time, trust me on this one, is that I think the danger for banking is that as much as we are counting on AI to do the job, AI cannot function alone. Trust me on that one. Okay, you still need supervision. You know, and
Mhm.
a lot of
Mhm.
times, is that because I have gone through the very basics. So if my associate comes to me with some kind of a report, I smell something. I didn't do the analytic. I smell. I said, oh, there's something in this area. And it's not quite up to it. I can't tell. I don't know what it is. I just smell it. Now, because
Mhm.
I was an analyst before, right? So you kind of feel that, it's not just guts. It's not just feelings. It's like you have done that before. So I think for the banking industry, the biggest challenge is that there will be more and more great paying jobs and will be very difficult to get into at the entry levels. That is the biggest challenge. But just not for banking. Look at consulting. Look at a lot of business. It's the same problem.
Hmm. Oh, that's a huge challenge. One we're
Yeah.
hearing about regularly. So
But that's
I
why,
love that.
I think we are
Yeah.
very excited because remember, as Simon, 3 years ago, we are the first one to pioneer the application of ChatGPT in every class we use, right? And we have
Mhm.
guidelines and everything. I think, put it this way, even though it's very competitive, I'm still optimistic for Simon grads because you folks know how to work closely with AI, okay,
Yeah.
and master that skill. That's so important. That's so important. So in a sense, you still have a competitive advantage, in an entry level job, but they're getting very hard to come by.
I think our students are experiencing that challenge right now,
Yeah,
and the benefits of being from Simon.
yeah.
So
Mhm,
I want to turn to another question before we close up. What are a few key pieces of advice that you're suggesting to your clients today, especially
mhm,
given all the geopolitical and macro
mhm,
upheaval that markets are
mhm.
currently navigating?
Okay, so going back to my Simon training, first of all, is the efficient market hypothesis, and then the first theory, 1952, modern portfolio theory. 97, 98% of all portfolio returns come from asset allocations. So this is what I learned in one thing over the so many years is that I cannot outsmart the market. But with my training in economics as a global economist, I see the world. I understand the political economy. So I give my clients better direction in terms of where they put the money. For example, a lot of times, you can study all the analytics about gold, for example. But 7 years ago, I asked my clients to accumulate gold, not because of analytics, not because of analytics. Sometimes you just, again, go back to asset allocation. We need to have some gold. Why? Why gold is good? Why? And why gold is down? Because gold originally as an inflation hedger, but now because everybody hates the dominance of US dollar. Simple as that. Okay. So every country is country buying, institutional buying, okay, sovereign buying of all goals. So it's not the retail investor that make gold happen. So a lot of things you said, you go back to again a lot of the macro things as an allocation. And then don't think that you can outsmart the market. At the same time, again, be a good listener. The clients, every client, I manage about 100 clients, varying from 10 million to a few hundred million per client. And every client has a different needs. Just listen, okay? Don't be too smart, okay? When the clients say that, always have the communication channel. I always ask the question is that, okay, what do you think about the economic outlook? They say, whoa, is it my job? No, I want to listen to you first. Okay, how do you see whether there's an end to the war? Why there's going to be an end to the war? You ask the clients all this question first before voice out opening your mouth. So you listen and then you construct something that they can live with. At the end of the day, I make a mistake in the earlier days in my career. Big mistake because I didn't listen. Why? I always think that I need to beat the market. But none of my clients ask me to beat the market. They just want me to have a consistent, persistent, risk control type of returns. And by the way, they don't look at Sharpe ratio. They don't even know what Sharpe ratio is. They just look at their monthly statement. Oh, the market is down 5%. I'm down a little bit. I'm okay. This is the type of risk management that they look at. So be in my business, always communicate. If there's any bad news, talk to your clients. So my clients always worry. I never call my clients before 4 o'clock Eastern time because it's market. I'm a portfolio manager. It's like a surgeon never call the patient during their surgery hours, right? So when I call my clients, they will say, "Oh my God, what's going on?" I said, "No, it's just something." So my clients hate to listen to me or call for me in market hours because they know that I'm very consistent. I'm a steady hand. My associate will set up the meeting, will go through a quarterly review and everything. If I call you, that means it's bad news. And there's bad news, I need to fix it right away. I need your permission. So I'm still feeling very good about the outlook overall. I really believe that the U.S. for all kinds of reasons need to settle the war. There will be, I would say, some kind of temporary ceasefire from time to time, um, but the war with Iran probably will be ongoing until till the at least till the end of Trump administration. But I think we will see some kind of solutions, especially the opening of the Shrouds of Hormuz.
Well, Evans, I thank you for this incredible conversation today, for sharing uh, all of the insights that you've shared. I mean, this is just incredible. The vulnerability, talking about your failures and the lessons that came from those failures. I really appreciate that. You continue to make us Simon proud, and we're truly grateful for the time you've taken today to share your knowledge with the community. I also want to thank all the students, alumni, faculty, staff for joining us today. Thank you for your time, and hope to see you at another Simon webinar soon. I want
Okay.
to just say the questions, we didn't get to all the questions that were posted. We'll share those with Evans
Okay.
so that he can take a look at them, and we'll share back in the follow-up email.
Yeah. And then probably I can dictate the answers and then to answer all the questions that they may have.
Yeah. Well, that's
Okay.
great. Well, thank
Very
you
good.
so much,
Okay. Thank you,
Melior,
Mitch.
everyone.
Thank you for giving me the opportunity to give back to my beloved Simon students and future Simon alum.
Thanks, Evans.
Thank you.